Hello students and welcome back to BankExamsToday.com. My name is Ramandeep Singh and today I'm going to discuss 7 principles of insurance. And it's really important for the upcoming Union Bank of India Wealth Manager exam. So this session is part of the Union Bank of India Wealth Manager Power Capsule. You can get it on BankExamsToday.com and there are 1470 most important questions available in this power capsule. Link is available in the description. You can get it there. So let's start with the principle of at most good faith. Students, there are two persons in the contract of insurance, the insurer and the insured. Who is the insurer? Insurer is the insurance company like ICICI, SBI insurance and all, right? Who is insured? Insured is the person who gets the insurance or who gets insured. Like people like you and me, if you get a medical insurance, your health is insured. Your medical bills are paid by the insurance companies, right? विश्वास के साथ आप काम करिए दोनों, right? So the insurer and insured, they must have at most good faith. They should not lie about material facts. If you are a smoker or if you do any drugs or if you had any disease in the past that can affect you in the future, you must disclose that in case of a medical insurance. अगर आप स्मोक करते हो, आपको कोई लाइफ थ्रेटनिंग डिजीज है ऑलरेडी, यू शुड डिस्क्लोज दैट टू योर इंश्योरेंस कंपनी व्हेन यू फिल द फॉर्म ऑफ व्हेन यू फिल दैट इंश्योरेंस अग्रीमेंट वाला जो फॉर्म फिल करते हो, उसमें मेंशन रहता है आर यू अ स्मोकर, आर यू एन अल्कोहलिक, जो आप एप्लीकेशन भरते हो. So it should be disclosed. Non-disclosure or misrepresentation makes a contract voidable. Contract void हो जाता है. So if a person is hiding that he is a smoker while buying life insurance or medical insurance, you are breaching the trust. So principle of at most good faith states that you should disclose all the material factors. सारे material या सारे ऐसे factors जो contract को affect करते हैं वो आपको disclose करने चाहिए. The next important principle is the principle of insurable interest. Can you get a life insurance for your neighbor? No, you can't. You cannot get life insurance of your neighbor, I mean, in which you are a beneficiary. You cannot be a beneficiary of a life insurance of your neighbor because you have nothing to do with him, right? So नहीं ले सकते आप, beneficiary नहीं हो सकते अगर आप अपने neighbor की पहली बात तो करा ही नहीं सकते, right? So the insured must have financial or legal interest in the subject matter of insurance, right? So you can do life insurance of your wife, your husband, right? You can do that. You must have financial or legal interest in the subject matter. Loss or damage should cause direct financial loss to the insured. In case of husband die, the family, the wife, the children, they get into financial distress. Okay. So without insurable interest, the contract is invalid. You can insure your house, but you cannot insure your neighbor's house. You cannot insure your neighbor's husband, right? Your husband can get a life insurance and you can be a beneficiary of that. Okay. Beneficiary of that insurance contract. A beneficiary nominee हो सकते हो, right? Principle of indemnity. You cannot make profit out of an insurance contract. You cannot make a profit out of an insurance contract. So insurance contract is meant to restore to the same financial position as before the loss, not better. So goal is to restore the financial situation. It is not meant to bring profit to you. For example, in case of an let's say an auto insurance, let's say car insurance, and so your car is damaged. Okay, so you bought the new car for rupees, let's say 10 lakh rupees, and you drove it for, let's say, 3 years. So at the time of insurance contract, the IDV, after depreciation, the value of your car is 5 lakh rupee. So in case of full damage, you'll be paid 5 lakh only. So you should not be making profit out of it. 10 lakh रुपए नहीं मिलेंगे, जो value थी उतना मिलेगा, right? So goal is to restore the financial situation, applicable in property, fire, marine, general insurance, but this is not applicable in case of life insurance, because you cannot evaluate value of लाइफ ऑफ अ ह्यूमन बींग. एक ह्यूमन बींग की जान की कीमत आप नहीं लगा सकते, राइट? फॉर यू इट कैन बी 10 lakhs, फॉर somebody else it can be 1 crore. So it's perception. So if your car is worth, right now it is worth 5 lakh rupee and it is stolen, the insurer can pay you at max 5 lakh rupee, right? So IDV जितनी है उतना पैसा मिलेगा, प्रॉफिट नहीं कमा सकते आप इस पे. Principle of contribution. First of all, it is not legal in most of the times, but in case for the same subject matter, you got insurance from two different insurance companies. एक ही subject matter के लिए you got insurance policies from two different insurance companies. You cannot make profit out of it. So those two insurance companies, they are going to give you claim in proportions, right? Let me give you a good example. A house is insured. The value, the insurance value is 10 lakh rupee, and you got two insurance policy of 6 lakh and 4 lakh respectively. And there is loss of 5 lakh rupee. You cannot make profit. So 5 lakh is to be paid by these two companies in the proportions, right? 3 lakh or 2 lakh देंगी. You cannot make profit out of an insurance policy. Principle of subrogation. So after paying the claim, the insurer acquires the rights of the insured against any third party responsible. So basically, after you get your money, after you get your claim, the insurer gets into the shoes of insured. Are you getting it? Let me give you an example. You have a car, right? You bought it for 10 lakh rupee. The IDV of the car is rupees 5 lakh. The car is damaged and the insurance company gave you 5 lakh rupee check when you went home. Now the scrap value of this car is rupees 60,000 rupees. You cannot claim this 60,000 rupee. This 60,000 rupee belongs to the insurance company. Okay, now the insurance company is going to sell the scrap. Okay. Proximate cause. So causa proxima. The claim is settled on the basis of closest and most direct cause of the loss. So in case of property insurance or house insurance, you insured your house for fire hazard, right? For fire, burglary, and etc. Okay. But due to an earthquake, fire occurred and it caused the losses. But the closest cause of fire was earthquake, for which you have not been covered. So you won't be getting the claim from the insurer. Okay. Mitigation of losses means even if you are insured, you should try to reduce the losses. Although you don't have to pay for the losses, but you should try to minimize the losses. You should try your best to avoid the damage. If a fire breaks out, you must try to call the fire brigade instead of letting everything burn for higher insurance claim. Okay, that would be a fraud. Try to call the fire brigade, try to, control the fire. You should do your best. Let's do some questions on the basis of it. Which principle of insurance requires both the insurer and insured to disclose all material facts? It's utmost good faith. Principle of utmost good faith. Mr. X insures his factory but hides the fact that it has history of fire accidents. So Mr. X is violating principle of utmost good faith. Insurable interest must exist at the time of the contract and at the time of loss of property. Okay. A person insures his neighbor's house, so there is lack of insurable interest. Which principle ensures the insured is restored to the same financial position as before the loss? It's principle of indemnity. Indemnity does not apply to which type of insurance? It does not apply to life insurance because you cannot evaluate the value of a human life. एक human life की आप value determine नहीं कर सकते. If a house insured with two insurers suffers a loss, both insurers, they must pay proportionately. This principle is known as the principle of contribution. A house insured with the company A for 6 lakhs and for company B for 4 lakhs suffers a loss of 5 lakh. So the company A is going to pay in proportion 3 lakh rupee, 3 lakh अपने proportion से pay करेगी. After paying the insured, the insurer can claim recovery from third party. That is known as the principle of subrogation. So the insured gets all the rights of the insurer gets all the rights of insured. Insurance company को जो owner of the asset है उसके सारे rights मिल जाते हैं. So that is the principle of subrogation. Mr. A's insured car is damaged due to another driver's negligence. The insurer pays Mr. A, sues the negligent driver. So which principle applies? Principle of subrogation applies. Which principle deals with identifying the closest and direct cause of loss? It's proximate cause. A fire occurs due to earthquake, but earthquake is not covered under the policy. The insurer can reject the claim. Which principle applies? It's principle of proximate cause. The insured must take reasonable steps to minimize losses. Which principle is this? It's mitigation of losses. I mean, अगर आपके घर पे आग लग रही है तो बुझाने की कोशिश कीजिए. ये नहीं है कि इंश्योरेंस कराइए तो लगने दो. So you should try to minimize the losses as much as possible. If a shopkeeper deliberately allows fire to spread in his shop to claim more insurance money, which principle is violated? It is mitigation of losses. Which principle forms the basis of pooling of risk in insurance? It is law of large numbers. So basically insurance is pooling the risk for calculating the insurance premium and to mitigate the losses. Life insurance companies calculate premiums primarily using mortality tables and law of large numbers. A person insures the same car with two different insurers. It's actually not even legal, but principle of contribution would be used in case of damage. In case, claim has to be provided. दो अलग अलग कंपनी से वैसे भी नहीं करवा सकते. In case करवाया तो they are going to pay the claim. Both companies and they are going to pay the claim and you cannot make profit out of it. Insurance policy से कभी आप profit नहीं कमा सकते. Which of the following is not a principle of insurance? Moral hazard is not principle of insurance. बाकी तो है. In case of marine insurance, insurable interest must exist. In case of marine insurance, insurable interest must exist at the time of contract and at the time of loss. दोनों time पे. Only at the time of loss. हाँ, ये एक case है. In case of marine insurance, the insurable interest must exist at the time of loss. If the insured tried to make profit out of insurance claim, so the principle of indemnity is violated. Okay. And that's, I guess, all for today, students. I hope you like the today's session. If there is any doubt in your mind, please ask your doubts and I'm going to answer all your doubts. Write a review for me on Google Play. This is my mobile app, Bank Exams Today. Just go to Google Play and give me 5 stars. I'll be very happy for this. Link to the Android app is also available in the description. And that's all for today, students. Thank you and have a very nice day. Bye-bye.